Bitcoin's movements over the past few days can be summarized in one word: lateralization. At the moment, it sits at $30,000 and markets closely follow rate hikes by central banks, both in the United States and Europe. As we can see in Bitcoin's weekly time frame, after losing the $34,000 zone, a bearish continuation movement was carried out, where the price headed toward the 0.61 Fibonacci area. The week starting May 9th, we saw a small body spike in the inferior part, meaning a hammer candlestick with a trend reversal connotation. This week, it opened at $31,000 approximately and carried out a bearish continuation movement until reaching $29,000. Once it reached that 0.61 Fibonacci zone at $28,700, we once again saw a price absorption, revealing buying interest. With the deployed moving averages, we can see that the crossing of the 20 and 50 period moving averages indicates a trend change in the weekly time frame, with the 20 period moving average serving as a resistance, although the price lost the 100 period moving average. Over the coming weeks, we can see that the 20 period moving average crossed that of 100, which is a negative sign, as it would imply greater strength in the directionality of the bearish movement. Between May 9th and 12th, we saw a small, almost imperceptible divergence in the daily time frame. Once the $33,000 zone was lost, it left an oversold zone in the Relative Strength Index, or RSI, reaching approximately 24 points and marked those ascending lows in the index, while the price marked descending lows. Right now, we're found in a price range in a lateralization phase. The 20 period moving average is heading toward the $31,000 zone. And in the case of exceeding it, the resistance zone to be tested would be approximately $33,000. On the other hand, the RSI is currently creating higher lows, while the price marks lower lows. This could be a divergence, but if the price falls sharply, displaying harmony between effort and outcome, the RSI would also fall, missing those lows and invalidating that divergence. And although we're now seeing a crossover move on the MACD, it seems that it is not enough and may simply be a spike from the green candlestick on May 19th. To understand this MACD movement, let's take a look at an example in the daily time frame of 4 hours. Between May 9th and 12th, we saw a divergence in the histogram and then a crossover of the MACD and signal lines formed, which started an upward move in the short term, taking us to the previous resistance. Now, let's move on to the macroeconomic analysis, which, as we know, has a direct impact on the cryptocurrency market. Now, let's take a look at the Eurozone Consumer Price Index, which sits at 7.4% in the month of April, somewhat less than what was expected. And while it could be a positive news, it continues to be an incredibly high rate, which is quite worrying, as it means that the purchasing power of citizens has dropped. In addition, a member of the Governing Council of the European Central Bank, the Dutch Klaas Knot, insinuates the possibility of raising interest rates in Europe by 50 basis points. In the United Kingdom, inflation has reached its highest point in the last 40 years and sits at 9% in the month of April. The Governor of Markets and Banking of the Bank of England assures that the rates will rise to control prices. In the United States, the President of the Federal Reserve says that it will continue to tighten the monetary policy until there is clear and convincing evidence that inflation is reducing to its 2% target. Jerome Powell attempts to comfort Wall Street, claiming that he will control prices without triggering a recession. But consumers seem oblivious to rising inflation, and in the United States they continue to spend. Retail sales in April grew by 0.9%, generating an annual growth rate of 8.2%. This data indicates that despite inflation, consumption is somehow holding up, and financial markets take this data as a sign that the Fed will continue with strong interest rate increases in the coming months. Now we'll have to wait for the Fed's minutes on May 25th, where we'll find out what direction is taken. What is on a downward slope with no breaks is the sentiment in the cryptocurrency market. The Fear and Greed Index continues to indicate extreme fear, which suggests that optimism has not made its way to the market. Now, let's move on to data offered by the blockchain to see what movements are being carried out by Bitcoin. In this chart, we can see that between May 5th and 11th, a significant Bitcoin input was seen in exchanges. And if we take a look at this entry data, it totals to 173,000 in the month of May. From that total, around 81,000 Bitcoins came from whales. In other words, the vast majority of those Bitcoins came from the Luna Foundation Guard. Here's a video explaining what happened with the Terra project and the Bitcoin reserves of the Luna Foundation Guard. With the data of outflows or withdrawals, we can see that 129,000 of those Bitcoins were withdrawn on May 12th, of which 50,000 were absorbed by whale wallets. On the other hand, funds had been liquidating positions from the beginning of April to the beginning of May, which is when an accumulation phase began, although between May 17th and 18th, the funds once again got rid of roughly 6,000 Bitcoins. In short, we must remain very vigilant to watch out for the movement in which Bitcoin pulls out of this lateralization phase. We'll be sure to keep you posted with further updates, so be sure to subscribe to our YouTube channel and turn on your notifications. Have a great weekend.